As traditional career paths become less certain, education services is stepping in, and small businesses are leading the charge. Welcome to the Commercial Pulse update for January the 13th, 2026. The Experian Commercial Pulse report is a bi-weekly snapshot of the US economy and what it means for small businesses across the country. The labour market continues to cool, but remains resilient. Unemployment stood at 4.4% in December, while the US economy added 50,000 jobs, below recent averages and signalling a slower pace of hiring. Wage growth is still positive, but gains have moderated, suggesting easing pressure on employers' labour costs. Inflation continued to trend lower, falling to 2.7% in November, the lowest level since July. Core inflation also declined, offering some relief for small businesses navigating elevated operating costs over the past few years. At the same time, consumer sentiment remains subdued, coming in at 52.9 in December, nearly 30% lower than a year ago. While confidence ticked up slightly month over month, consumers remain cautious, a dynamic that continues to shape demand expectations for small businesses. One area worth watching closely is manufacturing and logistics. The ISM Manufacturing PMI declined to 47.9 in December, marking the 10th consecutive month of contraction and its lowest level since October of 2024. Logistics activity also softened, with the Logistics Managers Index falling to 54.2, still signaling expansion, but at the slowest pace since April of 2024. Together, these indicators point to cooling goods-based activity, which may weigh on certain supply chain-dependent businesses into early 2026. The Experian Small Business Index rose sharply in November, increasing 15.9 points to 52.0, firmly within the normal range and reflecting a notable improvement in overall business health. This increase follows the end of the government shutdown and was driven by higher new account openings, improved approval rates, and increased new business formations. Importantly, from a risk perspective, negative credit conditions improved with reductions in delinquencies and utilization, a positive signal for lenders monitoring early-stage stress indicators. On a year-over-year basis, the index rose 9.1 points, reinforcing the view that small business credit conditions stabilized meaningfully in late 2025. This week, we take a closer look at the education services sector, one of the fastest growing small business sectors with fewer than 10 employees. Young adults, particularly those between 16 and 24 years old, continue to face unemployment rates more than twice that of the general population. They also perceive a higher risk of job loss compared to older workers, according to the University of Michigan. Historically, higher education levels are associated with lower unemployment, and while that relationship still holds true, the gap between those with associate's degrees and those with bachelor's degrees has narrowed in recent years. At the same time, the rising cost of traditional college education is accelerating interest in trade schools and specialized training programs. Enrollment in post-secondary education, especially trade education, is expected to increase, reflecting demand for targeted skills-based career paths. These dynamics are translating directly into business formation. Through November of 2025, nearly 76,000 new education services businesses had opened. And that's the highest level on record and more than double the number established in 2005. Employment in the sector surpassed 4 million for the first time in July of last year. Growth is being driven primarily by small providers, businesses with fewer than 10 employees, now making up nearly 80% of all educational services firms, up from 63% in 2019. And these smaller players are also accounting for a growing share of commercial credit originations. From a credit standpoint, commercial credit cards dominate the sector, representing over 78% of monthly originations. While many industries have seen tightening credit limits, average commercial card limits in education services have increased by 23% since 2019, now exceeding $19,000. And utilization rates remain relatively low. The average commercial credit scores have stayed stable, signaling disciplined use of credit despite rapid sector expansion. For risk leaders, education services highlights an important theme. Growth driven by small, young businesses doesn't automatically translate to elevated risk. In this case, expanding credit access has coincided with stable utilization and improving credit performance, underscoring the value of industry-specific risk strategies and continuous monitoring. And there's a lot more on the education services sector in this week's report. If you found this update valuable, explore more at our Commercial Insights Hub. And of course, subscribe to our YouTube channel if you are not already subscribed. And if today's insights sparked ideas about how insights on small business like this can drive your business forward, reach out to your Experian account team. Last, keep informed to stay ahead, and we'll catch you on the next one.